Terra Classic Market Module 2.0. If you ever held any Luna before the crash or got into Luna Classic after, this could be the single most important video for you to watch. What made Luna go absolutely parabolic from less than $4 to over $100 was the Luna UST mint mechanism, USTC growing, and also the demand for USTC for Anchor Protocol 20% yield. In the Luna Classic community, there's talks to 10 on the Market Module 2.0 without the mint version. We've also got Juris Protocol coming, which is going to be Anchor Protocol 2.0. So with all this, guys, could Luna Classic finally get the pump? I hope so. With Bitcoin breaking out, this could be our year, guys. If we get that bull market this year or next year, I believe we'll get one this year or next year. Hopefully we're in the best position. If you followed me, guys, if you haven't subscribed, make sure you subscribe. Lots of content coming on Juris and USTC Repeg in specific. I've always said Luna can do a 5x, 10x. We've done 10x pumps before. But if you want to get back to anywhere near, 1 cent, we need to do something with USTC. That was our unique selling point. Lots of content on L2s, and I'm part of Juris Protocol, but we need something to do with USTC. If you want to get back into top 20, top 10 coins, that is really, really important, guys. So guys, without further ado, let's get into the video. If you enjoyed the content, guys, do hit that like button and subscribe, and just put a comment, hi Rocko, thumbs up, USTC Repeg. It really helps the channel out. This is a very technical detail. I'm not going to get into all the technical details, but there is a summary thanks to Stratco for non-technical people, which I'll explain to you in a bit more detail later on in the video. So Terra Classic Market Module 2.0, net deflation engine that can reopen now, throttles itself as supply shrinks and cannot be trick printed through stale prices. So we all know that minting of Luna to defend the peg crashed the Luna Classic price. That won't happen in the market 2.0. So unlimited capacity kills. Hard peg to $1 is lethal. You can't peg something to $1 when there's billions in debt. You just cannot do that. We have to slowly get there, and this proposal suggests that community wants the market module back as soon as possible to restore utility and fee flow, but only accept continuous net supply decline. So it talks about the no minting approach, the burning of Luna Classic as well. So change the burn mechanism. Currently 10% goes to well, let me read this out for you before I get the numbers wrong. So 10% goes to Oracle, 10% goes to community, 80% to burn, but temporarily some will go to the market module liquidity pool. So there's a plan to shrink the supply as well. Some of the talks of the volume could be a bit unreasonable. If you are a dev or a quant, you can read this yourself and try to make sense of it. There's lots of updates that needs to happen as well. So reactivating the MM with dynamic pricing requires updates to current Oracle infrastructure, USTC price feed, feeder provider expansion, validator onboarding, feeder overhaul as well. So roadmap, I will touch on this, a code merge and testnet review. So around 500 to 1,000 lines of code, public testnet. So there's going to be lots of testing. It's not going to happen straight away, guys. Then mainnet launch, and also a review after 90 days. The reason why I'm for this is I want to do something, guys. I'm same as you as an investor. Again, with L2, you can be a bit more involved and you can see what we're doing with Juris. But with L1, it's very difficult with all the governance, validators. It's very hard to make a change. I just want to see something happen. I've got my money involved in this. If you're watching this or you're looking to invest in this, we want to see something happen. And if we make this market module, yes, it might not do anything. It might just be a short spike up. But if we can make it happen, attract new investors, think of the potential possibility. What we gain: immediate reopening. Traders can arbitrage on day one. Supply must still fall every day, every epoch of 30 days. As supply contracts, refuel slows and pool shrinks. Oracle save 30s, lags can't inflate. 75 lag kills the module. So there's some safe kill switches, if you want to call it, a spread freeze market module and redirect it to Oracle pool for future rewards. Burn 50% of spread fees are burned. Voluntary burns, again, you can read this bit as well. Some of the important notes: this was supplied by Stratco, so if you're a non-technical person like me, this could be more useful. So tax burnt amount for coming months cannot be predicted. So the impact of MM plan is based on assumptions. I touched on that. Parameters and mechanisms can and should be adjusted during the public testnet. This is a signaling prop The governance that the community wants to see this approach implemented. Implementation will be voluntary effort contribution of Stratco. There's no fixed deadlines. An alternative is that paid team decides step forward, quote for the work, gets governance approval. This could eventually speed up the implementation timeline. The risk of hyperinflation is mitigated, so I touched on that. There's no risk of that. This leaves minting disabled. Main risk are reduced burn of either Lunc and USTC, because we'll be transferring some of the burns to that, not 80% to burn. Community disappointment to unmet expectation. And guys, a lot of it, I have to say, is we want to create hype. I want to create hype as a trader, influencer, YouTuber, whatever you want to call it. And even if it's, we've seen it with Ethereum, even Bitcoin to some extent, we've had 70-80% dump. So I just want to see something happen. And it's not just a pump and dump. We're attempting to do it. And there is a chance if we can gain volume, it can happen. But there is a risk of like community disappointment. So guys, this is not a repeg proposal and not treating USTC as a stable asset. So we're not treating USTC as $1. It's not going to be pegged to $1. I know USTC Repeg because we're starting the but USTC will be it's not going to be pegged to $1 because you can't. There's billions billions in there. You can't just repeg something. You just mint Luna Classic and you just do what happened previously. We can't do that. 60% of burn tax proceeds, not manual burns by wallet, are redirect to swap pool. The price of USTC will be reported by chain Oracle, no longer fixed at $1 internally. This allows swapping at real market, gives the correct amount of Lunc for USTC. When swapping USTC to Lunc, Lunc is provided from the pool. User gives USTC to the pool in turn. So it's going to be like a similar swap. The fee of each swap, which not including the tax but 0.35 spread fee, will be distributed 50-50 between burns and the Oracle pool. So is it going to generate a lot of swaps? That's the key question. Incentive to use the to swap could be arbitrage options between sexes, dexes. So again, that's an incentive. This occurs because of on-chain price of the Oracle is not only updated each 30 seconds, which means it lags behind SEX prices often. DEX prices also deviate among others, so there might be arbitrage play. Lots of big investors might want to be interested in that. Furthermore, using the to swap might be an incentive for users to want to cause burns of one side, either Lunc and USTC, through their swaps. Most risks are mitigated by the safeguards, and it's good to know someone like Stratco is saying a lot of the risk is mitigated because they're the people that we sort of trust. Frag, Stratco, and a lot of the technical guys, community technical guys that has been supporting Luna Classic for a while. Can this cause hyperinflation? No. Minting is avoided in the swap, so that's a big thing that before I wanted to support this repeg proposal. Is this repegging USTC? No. USTC will be a speculative asset. It already is. If you've been following my YouTube channel, it's a speculative asset. It's not a stable coin anymore. We had to do that so it can stay listed on CoinMarketCap. What about Binance burns? They stop burning when we minted previously. We avoid minting with this approach, so Binance should carry on, in my opinion. What is the So it's the amount of Lunc and USTC that is allowed to be used in swaps during the period. Can I have an example? So 1 USTC is worth 200 Lunc. During this previous period, we had this much Lunc tax proceeds. At 60% rate, this would fill the swap pool with 400 million Lunc for the next period. If now we have 2 million USTC swapped to Lunc through the this would give the user 400 million Lunc in return. But if swaps now happen from Lunc to USTC, you're going to see these numbers instead. Wouldn't the lower burn significantly overall if that much is redirected to the pool? No, all remaining balance in the pool would be burned at the start of the next epoch. It depends on the swap behavior. If more Lunc is burned, then less USTC, or more USTC and less Luna Classic. Some people can argue it's pointless, but no, the fee that incurs 0.35%, that could be helping with the burn and also fill up Oracle pools, because one of the issues we have in the community is the Oracle pools are going down. Amount of swaps, again, this is quite kind of speculation. If we have lots of swaps, we'll have more burns, more money for Oracle pool, more people that are staking. What volume can we expect? So his suggestion would lead to volume of 30 to 40k. I think we need a lot more volume, but hey, that's his suggestion. What you said about USTC valid at market price, how would the arbitrage work? Again, I would recommend you guys read this yourself, because then this video will end up being a 20-30 minute video. Major risks, I mean, I talked about the hyperinflation risk is being mitigated. The like rate risk is high expectation, which can lead to disappointment. In terms of developing, so offering to develop this voluntarily, he will do it in his free time. PO implementation 2 to 3 weeks. There's also an option that a team can quote for work. So again, I think Strat should be rewarded for that. He's been one of the heroes, I'd say, of the community, the amount of work that he's put in. If you do it voluntarily, why do you need a proposal? Because he cannot spend the time of development without a signaling proposal that shows an approach as is wanted by community and governance. There's a lot of reservations about opening the market module, so approval for this is prerequisite for me to personally start the development work. Test take, so again, it's not foreseeable. As critical part of the blockchain, we need to stress test this approach in all possible ways. This includes simulated price manipulation, Oracle feeder outages, price volatility, swap volume. The more helping hands, the better it will. The verification will be. As review and audit mentioned, this is not free work. A team would quote for a review, or audit company offering an audit would certainly request funds for that. What if we want MM in its original form? Changes will be designed as minimal as possible in terms of changing from mint burn to the pool approach. Reverting this for a later use of MM, including mint burn mechanism, is possible. So let me know what you guys think. This is like an incremental repeg, if you want to call it. It's not the old mint burn function. It's more like a pool approach. But there is a possibility with the swap volume, the fee incurred, we could still potentially be burning a lot more. Bring back attention to Luna Classic. I want to see action, guys, not just talks. I'm excited for this. Let's see what come out of this. Stratco is offered to help. It'd be great if you are a developer or a developer, send this video to him, send him the proposals. Would love for a team to send a price quote, what they think about it, and get this USTC Repeg pool approach market module 2.0. Get the momentum going. Like I've always said, there's a lot of luck involved, and luck could be on our side. We've been burnt. Myself, I would be in a lot better position if this crash didn't happen. A lot of other people would be in better positions. But guys, what I do want to say, we could get lucky if Bitcoin's going crazy. We have an altcoin run, and then we have this Repeg proposal. We have the Juris protocol launching. What was Anchor protocol? There's lots of other projects that's been launched in Luna Classic, connecting with Cosmos. So Juris protocol have been going to interchain Cosmos events. All this could lead Luna Classic to, not saying top 10, top 20, but give us like the 10-20%, 20x pumps that we've been waiting for years. So let me know in the comment section below what your thoughts are. Make sure you subscribe. I'll bring you a lot more content. There is another Repeg proposal coming from Redline, and let me know in the comment section below. That will be covered in the next video. That's actually a new USTD coin that will support Luna Classic, and this can actually support this proposal as well. So let me know in the comment section below if you're interested. Thank you for watching. Let's go Luna Classic. If you haven't bought Luna Classic, guys, this could be a good level to buy. This is a level that I've been buying since every crash this level has held. As long as Bitcoin don't crash below 100k, I think we're going to see a nice 20, 30, 50% pump potentially. So hit that like button, subscribe to the channel, and I'll speak to you guys later.